I hope it's okay for us to stay on our seats. Okay. So we can make this a more interactive dialogue. So my presentation will be on promoting low-cost formal remittance channels and financial literacy, and I will tie this up with financial inclusion and the inevitable link of the importance of financial inclusion for remittances as well for our overseas Filipinos. So just to give you a quick I guess, context or country context, although our colleague from POEA has already also provided you some information. I will give you that and then make the important link within remittances and financial inclusion. And I think this is important in the context of maximizing the benefits of remittances for economic development and for also the issues raised in earlier sessions about reintegration and as well as the importance of coordination, which was also a topic in the earlier session. So just to give you an idea of how important remittances are to the Philippines, I think some of you will be very familiar with these figures. We have about 10.2 million overseas Filipinos. That's from the Commission on Filipinos Overseas. And the latest amount in terms of remittances is 25.6 billion, which is approximately about 10% of our GDP. The World Bank has ranked us among the top 3 in terms of remittance receiving countries. So it's a big source of our foreign exchange. It's also a very important part in terms of contribution to our economy. What is important to note in this space of remittances is 3 areas, which I will also present. How are current beneficiaries of these remittances using the funds that are sent to them? What are the channels that they are using, and how much is it costing them? These 3 issues are important to understand how we can maximize the multiplier effect of these remittances towards really improving economic well-being of the households as well as contributing to the broader economic development. So the recent survey conducted by the BSP showed some of the main areas where remittances are used, and not surprisingly, but also not very ideally, 96% are really used for consumption, for food and other household needs. For durables, 22%, 70% say, and these are percentage of respondents who say that they use it. So it's not a total. It's not a total pie. The numbers won't add up to 100%. But you will see the bias towards consumption. Although there are investments in human capital, 70% in education, for example, and 46% in savings and in 10% in investments. Having said that, how are they sending the remittances? We are happy to note that formal remittance channels are increasingly used in the Philippines with the different players. So the channels, you will see there are correspondent banks, bank branches, remittance tie-ups, and our money transfer operators. So the informal sector, the remittances channeled through the banking system is very significant, with only a small portion now being used using informal channels. In terms of the cost, as I said, these are the 3 areas we want to look at. The sending, for example, of 200 from the USA to the Philippines, and this is just a snapshot, the USA being one of the main corridors also, would be an average of about less than 5% to total cost, which is aligned with the objective of the 5% target of the cost of remittances. So now, what does this mean for financial inclusion? And we would like to think that remittances could be seen as a doorway to financial inclusion. And why do I say this? Is that if you can look at the World Bank Findex, for example, when they asked what they use their formal accounts for, why they opened these formal accounts, the largest would be to receive remittances, which is 12.2%, said that they use these accounts to receive remittances. So it becomes sort of like a a catalyst or an incentive to open an account. And then if we look at the percentage of overseas Filipinos allocating their remittances to savings and investment, not very significant, but it is increasing, which we think is very encouraging. This is important for a country like the Philippines, where financial inclusion or access to financial services still needs a lot of work. And maybe just to take a step back, how do we define financial inclusion here in the Philippines is that it is a state where there is effective access to a wide range of financial products for all. And products include instruments or channels where they can send and receive remittances. And we focus on unserved and underserved markets, including here the overseas Filipinos and their beneficiaries. We are cognizant of the fact that some of the overseas Filipinos have difficulty, for example, accessing loans from our banking system because of they are not in the country, and so and their beneficiaries are unable to access the loans on their behalf. We also have issues about them opening bank accounts in the country. We will show you just some of the excerpts of why it is such a big challenge. In the Philippines, only 31.3% of adults have a formal account. And the concentration of this is really in the urbanized area. So actually 67% of the amounts of deposits are concentrated here in the National Capital Region. In terms of credit, only 11.8% have credit from a formal institution. So that really leaves much of adults getting from informal sources and from family and friends. In terms of actual access points, about 36% of our municipalities and cities do not even have a bank. And why is this important? Is because, for example, for overseas Filipinos or overseas Filipino workers in particular who are going abroad and with very defined contracts, if they are unable to access these financial services back home, it will be more difficult for them to reintegrate and to really create economic opportunities for them back home. If they're unable to build on what they have learned or what they have saved up from their work overseas to get access to a credit line, for example, or a loan that can help them start a business, that will limit their opportunities to stay home and to create more economic opportunities for them back home. So these are very real challenges that are facing our overseas Filipinos. So in this regard, we have undertaken several initiatives in how we can encourage availment of financial services for the unbanked. So for example, we have liberalized requirements, for example, like customer identification. We've also liberalized branching. We've allowed our banks to set up very small-scale banking offices in areas that are probably not economically feasible to open a big branch. And they can do a host of activities, including accepting remittances and also some limited foreign exchange. So we see this is very important because, in many of the beneficiaries live in areas that we see are unbanked. Very recently, we've also amended our regulations on the money service business and also our pawn shop regulation. Why is this very important to the Philippines? Because pawn shops now in the country are actually positioning themselves mainly as players in the remittance market. And a little, some of them are veering away from their core, which is the pawning business. The reason for this is that because these large pawn shop networks are actually present all throughout the country. And we have seen in our survey that they are the access points that actually the Class D and E really prefer to go to for transactions. So they pay bills there, they send money, they receive money. And so our current regulations on pawn shops recognizes this strategic importance. And this was just approved last week to ensure that they operate in a safe and sound manner, they are reliable, and that they really protect the consumer. So our initiatives have really been to expand access, formal access points, and make sure that they are delivering responsive and responsible products. The BSP will continues to try to remove barriers if there are any existing barriers, so that these market players can really provide the much needed services in the countryside. So that's on the access to financial services side. On the financial literacy, maybe just to give you an idea, on the average adults, and this is again according to the World Bank Financial Capability Survey, only 3.2% were able to answer the 7 financial literacy questions correctly. Half of adults know how to compute for simple interest, but compound interest is something that is, very abstract to them. Segments of population that we see that struggle most with understanding basic concepts were those that did not save as a child, those that are non-household heads, and sorry for the men in this room, but men. So, and this is based on a survey. This is also indicative of some of the targeted interventions that we have put in place. Very relevant to the overseas Filipinos as well is that less than a quarter actually have sufficient provisions to cover their expected old age expenses. So this is one thing that we are also looking at. We have very many stories of overseas Filipinos who come home, who worked for 10, 15 years and have no facility they didn't save for retirement or for old age expenses. And so all the hard work that they put, they are not able to benefit from it in their old age. And this is where we've also been focusing our financial literacy efforts. And just related to this, recently we started the implementation of a personal equity and retirement account, which is now open to overseas Filipinos, to self-employed Filipinos, actually to the general public, where they can actually avail of this additional investment opportunity for their retirement. Again, the younger generation is lagging behind in terms of ability to manage expenses. So a lot of our financial literacy efforts are really targeted towards the youth because, as we showed earlier, the ones who are having difficulty are those that didn't save early on in their lives. And then, of course, the importance of media in making sound decisions. And so what has the BSP done, considering this backdrop that I just presented? Our work in financial inclusion has been in these 4 key areas, mainly in policy and regulation, in advocacy, in data and measurement. We've put in place national surveys. We have regular status reports, but also on financial education and consumer protection. And I highlight the policy and regulation as well as the financial education as those that are really crucial for addressing some of the challenges in terms of sending remittances home. So just to give you some examples on policies that we've put in place that I guess can lower the cost in terms of remittance channels. Number one is we've allowed our rural banks. If you're familiar with the Philippine banking system, we have the big universal banks, we have thrift and savings banks, and we have rural banks that are actually based in communities. So they're like countryside banks that have a wider footprint in terms of physical reach. We've allowed them to have foreign currency deposit units. So this will facilitate, at least in areas where they operate, can facilitate remittances. We've also opened up in terms of technological innovation. The Philippines is one of the first countries that put out an electronic money framework in terms of regulation. And the electronic money is really just a wallet that it's not a bank account, it's issued, and it's really more a transactional account. And with this, people all over the country can transact through agents, and these agents can be the local drugstore or a retail shop. And because of the e-money ecosystem, these can be actually ideal channels for remittances that are formal, that are regulated by the Bangko Sentral. And most recently, and when I say very recently, this was again also just 2 weeks ago, we've approved our regulations on cash agents for banks. And what happens here is that banks can employ third-party retail outlets that can do the cash transactions for them. So one example would be if you want to deposit into your bank account, you can do it through, let's say, a drugstore or hardware store. The important thing is that they have an electronic device, maybe a POS, that you could transact directly to your bank, but then the cash exchange will be done through the agent. So it is like an automated, it's like an ATM, except you do it in a retail store. And this for us could be revolutionary in terms of expanding banking services in areas that are unbanked or unserved. And this is again an opportunity to really be a channel for remittances, and not just remittances, but to establish actual banking relationships. So if you do it with a pawn shop, if you do it with a money service, money transfer operator, that's great. But if you transact your remittances through a bank, then you're able to possibly open the door for other value-adding services like a savings account. And then if you build up your history, you can probably access a loan or a credit facility. So we see this as a very important development in terms of our policy and in expanding the options there are for remittances, and with the expansion of options, increasing competition, thereby lowering costs. Of course, also on the cost side, we have regulations on transparency and disclosure. In fact, we mandate all our banks and non-bank financial institutions to clearly indicate the remittance charges. And this has allowed comparison across providers. In our website alone, in the BSP website, we actually have a portal where wherever you are in the world, you can pick the corridor where you send remittances, and then it gives you a range of providers, and both, if you're being charged on both sides, then it will be very transparent for you. And we have seen that this has actually led to the overall lessening of remittance costs. So those are all on the initiatives that we are putting forward in terms of financial inclusion to expand access, but we think that this has a very direct effect on our overseas Filipinos, their beneficiaries, in terms of the remittances and how they can make them work for their economic well-being. On the financial education and consumer protection, we have a comprehensive economic and financial learning program that we do, that we target to different segments. And one of the important segments here is the overseas Filipinos. So we also work with our embassies. I understand we also have some partnerships with the POEA for their departure, the pre-departure seminar, PIDOS, to provide, just some basic financial literacy. We also go to areas where there's a concentration of Filipinos and conduct financial literacy training there. We believe that, because of the significance of the overseas Filipinos and the remittances, this is a very strategic segment where we can develop, increase the financial literacy levels. So basically, those are the things that the BSP is doing in this area. But we recognize also that this is something that is not just our exclusive domain. In fact, I think I'm the only central banker here. Of course, there are other ministries and departments that need to be involved, or in fact take the lead, and the BSP is only supportive of this whole of government approach to address this issue. And because of that, we have also launched in 2015 the National Strategy for Financial Inclusion, and the United Nations Special Advocate Queen Maxima was here to launch this strategy for us. last year, 2016, was focused on really the implementation of many of the programs enrolled under the NSFI. You will see here policy and regulation and financial education as key components of this strategy. You will also see here that the Commission on Filipinos Overseas is a partner in this national strategy, and we're also open to other agencies that will support this initiative. The National Retail Payment System here is one of the sample projects that we have enrolled in the national strategy. So the way we've established the strategy is that it's a principles-based document on where we want to go in terms of financial inclusion, and each agency enroll actual programs that will lead us to the strategic objectives of the strategy. And the BSP enrolled, for example, the National Retail Payment System, where we hope to create the system where it will be interoperable, reliable, affordable, and safe. To give you an idea why this is important, Filipinos make about 2.5 billion payments in a month. So bills payments, remittances, transfers to people, and only 1% is electronic. So we're still very cash heavy in terms of transactions, retail transactions, and we believe shifting to not fully electronic, but at least increasing the 1%, could provide us more opportunities for lower costs and also more opportunities because of the efficiency gain. So this is also very important for remittances, because now we envision the ease of sending money from any account to any account. So if you have a wallet to a bank account to another bank account, using any modality that you wish, which is currently not available in the country. So this is another example of some initiatives that we think can address cost and efficiency of sending and receiving remittances. Maybe just to end the slide with some challenges and opportunities that are related to the topic, the de-risking issue or phenomenon, some have called it, where global financial institutions are terminating or restricting business relationships with remittance companies. A lot of our money transfer operators have been affected by this, operating in like the relationships with international banks, for example, have been terminated. So which makes them unable to transact in those or provide services in those jurisdictions where they no longer have, for example, correspondent banking relationships. We fear that this might increase the cost of remittances. Already we have some evidence that it has increased the cost of remittances in some corridors, and also our fear that it might reverse trends of moving to the formal sector by making people revert back to informal channels if the fees are restrictive or if the access points are no longer present where they were before. So we continue to coordinate with the stakeholders here. We monitor them. We continue to improve our AML CFT regime so that the global institutions will not include our MSBs in the global de-risking. Again, we've updated our regulations on money service businesses. So we hope that this will address some of the challenges that de-risking brings about. But on the flip side, we are also seeing a lot of financial technology or fintechs that are being introduced in the market, which we think can be, can revolutionize the sending and receiving of money. And our approach here has been to understand all the developments, engage with these technology companies, and continuously provide proportionate policy and regulation, as well as coordination with other regulators. So in a nutshell, those are the things that we are doing. The importance of all of this to remittances and to financial literacy, and some of the challenges and opportunities. And we'll continue to coordinate with all the relevant bodies so that we can do our share in making sure that our overseas Filipinos' hard-earned money really are brought to the Philippines at the safest, most reliable manner possible, lower cost if possible, so that they can really contribute to economic development of their families and also of their local communities and our broader economy. So thank you very much.